Hi everyone, SIMP, palm oil, of course. So we start with the plantations. You can see that since 2014, pretty much not much growth in the plantations. Very similar story with the rest of the sector. In terms of production, if we look at the fruit, it's also very flat, very flat. Sales, first quarter upstream plantation sales at 1%, so that's recovered from negative growth before. But the downstream minus 2%. So net that is minus 1% growth in sales. We were looking for 7%, so we were not correct for this one. But we think that after maybe a flattish second quarter, the sales will jump with higher production and price, as with all these companies, into the third and fourth quarter, and then seasonally lower in the first quarter again. So growth of about 6.5% in the next 12 months. Cash flow, we have had similar story with the others. 2015-16 negative cash flow, then into 17 when prices were up positive, then back negative. But in the last 12 months we have had positive. Most companies not yet, but SIMP back to plus, although that is because of pretty high working capital. Next 12 months, so here you can see it coming up to zero. So with our sales growth, no working capital, we see a small free cash flow for the next 12 months. Similar story also in the balance sheet, net debt all the way, and that got up to almost 9 trillion in the second and the fourth quarter. And when you look at the chart of that, you can see there. So it kind of looks like the net debt is starting to bottom out and come up, and it will improve with our free cash flow forecast. For the profit, now in the P&L, there are costs that we can't explain, which must be non-cash because they're higher than the cash costs in the cash flow. So what we've done is we've used the cash flow costs. That's the operating cash flow minus the receipts as a percentage of the receipts. And that's come up to 75% in the first quarter. So this has been improving margins. You can see that here. Quite a nice improvement in the costs, but we're going to use the last 12 months 85% for our forecast. And what happens is we've had a net loss here. See that? Coming up a little bit, and we're going to forecast still net loss, but smaller net loss in the next 12 months. And then for the valuation, so we've got 172 billion of free cash flow from here, using our 1.6. So that would be almost $1 billion of market value. We're giving it a 40% discount, and that's a target price of 417. You can see how cheap this company is. They should be able to do a lot better. Price to sales 0.22, price to assets only 0.11. That's almost the lowest, third lowest, I think, of all the stocks we cover, and 0.18 for the equity. So there should be later a lot more upside than that. All right, bye.